Money is starting to move back into credit. We're starting to see some fairly juicy yields being delivered. But from what I'm hearing from you, the sense seems to be that actually the worst is still to come. The more difficult period is still to come. What do you think the default cycle looks like next year? And do you think we are seeing the wides right now, or do you think we go wider?
Well, a couple things. First, just from a, what I think should happen as opposed to what will happen. I personally think that both the Fed and the ECB, but especially the Fed, would be wise to pause and see what the impact of the tightening that's already in the pipeline will be on the economy before continuing down the path that we're on. I think, unfortunately, the Fed has the conviction of the converted. Having been wrong last year, it now it feels the need to double down on its inflation-fighting rhetoric and commitment. But the problem is the following. Most of the impact on the economy and on businesses, including housing, back to the discussion you were having before, from tighter monetary policy is yet to come. In other words, if the lag from a change in monetary policy is 12 to 24 months, that means that most of what they've put in place hasn't yet hit the economy. And the problem in 2023 is if we hit an air pocket and there's sort of over-dialing the concern about inflation in 2023, and we have all of that tightening still to hit, there's not going to be a fiscal policy cushion because of the partisan split between the House and the White House that will occur in 2023. So that's a bad combo. And given that, I think it would be better for the Fed to pause and wait. Now, back to your question, they're not going to do that. And so I think markets are just looking for any hint of when that will occur. And that's exactly what happened when the Fed, in its statement, seemed to suggest one thing. Markets responded very quickly. And then Mr. Powell came out and said, no, that's not really what we meant. And the markets responded to that also. There's a heightened sensitivity to where the end of this tightening cycle will be from the Federal Reserve in particular.